Hi. Hang on, I'm just getting it there.
Okay.
And I did leave a note earlier in our organization group chat that if anybody had questions to, type it in the chat. I'll keep an eye on it. And then at the end, we can ask questions. I find in my experience when you do this that a lot of times the question you ask actually gets answered throughout the presentation. So just, put the question in the chat if you need to have an answer for something, and then we'll cover it afterwards.
Okay.
All right, so
So,
the time is yours.
okay. So, I'll just introduce myself. My name is Emma. I'm a potter by trade or profession, as you will, and I have spent I think 8 years doing personal taxes for people, and in that time developed a lot of knowledge and skills around the business side of taxes. So for this discussion, I'm just going to talk about personal sole proprietorships or unincorporated business taxes. If you have incorporated your business for any reason, then that is a whole different issue and is not something that I would want to cover in a Zoom meeting, quite honestly. But we can talk about that later if anyone's in that situation. And if you have any questions about whether you should incorporate it or not, we can cover that later as well. So essentially, what I want to do is just go over the form. When you do your taxes, you report when you're working, you get your T4 and you report the income, and the CRA says, thank you very much, pay this much money, and home you go. When you're doing business taxes, you have essentially one more page to fill out, one more, not page, form to fill out. And that's this one. It's the statement of business or professional activities. It's known as the T2125. And that's as you can see up here, T125. And it is essentially a way of reporting all of your income. Hang on, something's just cropped up. So I'm just going to move that over there for a minute. Oh, no. Okay. So of reporting all your income. So when you're filling this form out, you start with your name. So you would put in your own personal name and, whatever your social number is. And then like my social insurance number, and then your business name. So as a small business owner, you do not have to have a business name. You can operate as yourself. If you have a business name, so I do, I call myself, oops, spelling mistake. I call myself Pottery by M. So that is what I would enter here. But if you are selling as your own name, you would just enter your own name here. Okay, so if you haven't registered your name with your local business government, so with your local city, province, or whatever, then you would just put in your own name here. Now, if you have registered your business, you will have a business number, and this may or may not be a GST number. So if you have a GST number, it's, oh, go away. You're going to have, sorry, it's it's actually telling me that I'm not putting in enough numbers. Okay, whatever. You put in your business number. I'm not going to spend any time on that. And if you have registered for GST or PST, then you will have the requisite tax number on the end. So my business number is whatever it is plus R001 on the end. And that means that I've registered for GST. And I'll come back to whether or not you should register your business and whether you should be doing GST and PST shortly. And then your business address, this is going to be your home address. So you're going to write in wherever you're living, pothole capital of Canada. In the province, I'm in BC, so I'll just pop that in.
we don't get T4s as
No, no, that's right.
ambassadors. Yeah, we
No,
don't get T4s.
you won't receive a T4
No,
unless you've incorporated and you're paying yourself.
yeah. I
So
don't think any of us are.
no, no. So now we're talking about your fiscal period. So for a small business, your fiscal period is always going to be January to December. So in this case, it's going to be January 2024, January the 1st, 2024 to, and it's always the year first, and then the month, and then the day. So then it's going to be the 12th of, December the 30th, 31st of the year. So regardless of when you started your business, your financial year, your fiscal period is always January the 1st to December the 31st. I started my business in March originally. So my first fiscal period was March to December, and then January to December, January to December. If you start your business in December, then you don't actually have to do taxes for that first year because it's just a month. You can add it to the following year, but you just do it January to December. So are you closing your business? Yes or no? Obviously you're not. Now we come to main product or service. So for me, it is pottery. I don't know what else, what other people are doing, but whatever you're doing, baking, knitting, painting, creating of some form. So now the industry code here is where it gets interesting, because in order to find the business code, what we have to do is we have to go to the National Institute of Industry Classification System. So NAICS, you can see, am I covering anything up? You can all see that?
Yeah.
So if you put in the NAICS code, and it says that on the form. It says, oh, it doesn't say it on the form. It used to say it on the form, but that's what you're looking for, the North American Industry Classification System. And this is actually based on the US, but it works in Canada too. So this just gives you a load of blurb about what it is, and then we're scrolling through. So this is, once you know the area that you're in. So if you're in manufacturing, so let's say you're making clothing, so you might go into manufacturing, go through manufacturing, or retail, or finance. So you will pick. The easiest thing to do is to find the search box. If I can,
we're all the same. We're here. We are all with Epicure, all of us.
Ah, okay, right. So let's just type in Epicure and see what that comes back as. No results. Okay, so Epicure is that's retail.
Right.
That's going to come under retail. So I'll just put retail
but
here.
It's home sales. It's not retail.
Right.
You can't go to a store and get it.
Right. So then you scroll down. So the first 44 is your first, 44 or 45 is your first number. So that's the retail trade sector. Okay. So that's, as you can see here, the retail trade sector. And now you're going to scroll down and find which is in here. So it's probably going to be specialty food retail. Would that sound right?
They're pre-made food items. They're like herbs and seasonings and that.
Yeah, so I'm going to go specialty food retailers. You can look through them all,
right,
and try and find one that fits better. Now, the thing here is that this is not that critical, as long as you're in the right general area. Okay, so specialty food retailers, and then in here, all other specialty food retailers.
Right. And we can't see, we see your form that you're on, but we don't, where it says industry code, it's just a yellow screen for us. We don't see if there's.
Oh, you don't, you're not seeing
No,
this?
No.
Oh, okay. Dang. Why not? It should be sharing my screen completely.
Like we can see the form.
Yeah, you can see
you've been typing.
Okay.
We can see your
So,
cursor in the yellow
but
highlighted area.
you're not seeing the website that I'm giving you. Okay.
No, no,
Okay, so that's a shame because
right.
that's what would have really helped. Anyway, I'll come back to this.
Yeah.
So, um, so when you type something in here, do you see it now? No,
No.
no. Okay. 445 298. Okay, so I'm going to type this number in here, 445298.
Okay, so we could see you typing the number now.
Yeah. So that is going to most likely be the number that you're going to use for your industry code.
I think most of us probably do have an accountant or somebody, or will be getting somebody to do it for us to make sure that we're getting all of the information in that we can. So I think most people are probably looking at what kinds of things are tax deductible. What can I use? How much can I use?
Right. I understand that.
Yeah.
And I'm going to come to that, but I think that it's
Okay.
important that you know this as well, because if you go to a tax preparation specialist rather than accountant to get your taxes done, they'll do a much better job. Accountants don't necessarily, I'm not going to be sweepingly generalized, but necessarily they don't know taxes. They don't know how to fill out these forms. And this industry code is not essential, but it's relatively important that you get the right one because it depends on that number as to how you're taxed. Okay, so it is important that you understand what these things are. So your accounting method is most likely going to be accrual, and basically what that means is that you will report your income at the time that you make the money. So if you go to a market, for example, or you have a party event, and at the end of the day you've taken $2,000, then you report that on the day that you take the money. Even though some people might pay you later, you might receive money further down the line, you pay it, it all gets done on that a day, unlike cash, which you report when you actually receive it. And again, that can be relevant to most people who have small businesses do accrual because it's much easier to maintain the accounts properly, and it can be relevant to your GST, PST status. So your tax shelter is not important. If you have a partnership with somebody else, then you would put your number there, your business number there, because the other partner will be reporting their income on their T2125 and then your percentage. Okay, so if you have the internet, if you have a website that you're selling your products through, then you would enter it here on the internet business activities. And this is literally just the address and how many pages and the percentage of your gross income. So if you have 20% of your income comes from your Facebook sales, that is where you would include that information. And it's a statistical thing, it's not a financial reporting. So this is the important section that we're getting to now, which is where we talk about all of the income and all of the expenses. So with the difference here is business and professional. Professional is if you're consulting, and on the professional side, and the business income is for everybody else. So you're going to report your gross income on here, on this this piece here, and then you're going to include your GST, PST payments that you've made. And your GST, PST status depends on your income level. So does everybody know that? Know what their income level is at? So if you're
T4A, we get a T4A that has our commission,
from them,
what we've
okay,
been paid on our commission.
okay. So then that, and it's paid for you. Epicure pays it for you.
No, it just says this is how much. Oh, yes, we've been paid our commissions. Correct.
Okay. So Part C, a lot of this information just gets self-populated when you fill out the above, and it's essentially your gross sales with adjustments made for various aspects of the first form. So Cost of goods sold. So this is when you have inventory. So if you have purchased a whole pile of samples, for example, and cartons and boxes of spices and you know the stuff that you're selling, you would put that in here. So if you have like $2,000 of inventory sitting so that you can sell it at your event or at your party, you would put that in here. So you would include that there, and then any extra purchases you've made in the year. So you need to keep track of all this information so that it can be reported accurately. So if you've bought another $2,500 worth of inventory across the year, then you put that in here, and then what you have in your closing inventory. And then so you had started the year with 2,000, you purchased another 200, and now you've got and at the end of the year you've got 1,500. And then in here you put the cost of goods sold. So that comes from subcontracts. If you, I don't know if that would work for you, probably not for you guys, and other costs that are associated with the cost of goods sold. And you will get that information as you keep track of everything.
Hang on a second, Em. Can I get everybody to just mute themselves, please, unless you have to ask a question? There's a lot of echoing and background conversations that are interfering. Thanks. Sorry, go ahead.
No, that's fine, not a problem. So now we get into what you can deduct, which is the essential meat of the sandwich here. I don't know how much advertising you do, but advertising can cover many things. It can cover things like business cards, printing up business cards, printing up coupon sheets, printing up of menu cards or brochures of information. So if you do any of that, I'm not sure whether they provide you with all of that stuff or if you do it yourself. You can also write off the cost of your website. So if you do have a website that you've paid for, and so you have web hosting and you have website maintenance, you can put that in under advertising costs. You can also, if you take out notices in newspapers or in coffee shop news, anything like that, that would all come under advertising. Meals and entertainment is an interesting one because you can only charge what it costs you to schmooze. So if you take a client out for coffee, you can expense their coffee, but not your own.
Oh.
Okay. So if you take a client out for somebody's, let's put it another way. If you decide that you're going to have an event and you want to make something to use the spice mixes with at the event, you can classify that as entertainment. Okay, so you can write off the cost of the food that you use at the event. That would be classified as meals and entertainment. If you take a few clients out for coffee, you can expense all of their coffee, but not your own and not the tip. Okay. So that's just something to remember that, and usually what they say is 50%. So if you take somebody out for lunch at Ricky's and the bill for both of you comes to $28, you can expense $14 of that. Okay, so the next line is bad debts, and bad debts is where somebody hasn't paid you. And the question is how long before it's a bad debt? And that's only something that you can decide. So if you have a client who hasn't paid you for 3 months and you just know you're never going to get that money, you can write it off at that point. For some people, 3 months is not enough time. You might want to go longer, 6 months or even a year. For some people, 2 or 3 years before they know they're never going to get that money. You decide when you're writing off that bad debt. So you unfortunately have to eat the cost, but you can write it off against your income, the full amount. So that's, that's good. So insurance, now here we're talking about any business associated insurance. So you're working from home, and presumably you have to pay extra on your home insurance because you're working from home. So the extra that you're paying because you've got your business at home, that is what would be here on the insurance. If you go to markets, like I sell at markets, so I have market insurance, vendor insurance at markets, and that covers principally liability and also damage. So any insurance that you have there, and this is not, I'll get onto the car later, so it's not your car insurance. So interest and bank charges, all of your bank charges you can write off at this point. I'm hoping that you all have business bank accounts. If you don't have a business bank account, I strongly advise you to get one because it's much easier to track your banking for yourself. So when you do your reconciliation, when you do your accounts at the end of the month end, you do your reconciliation, it's much easier if it's just your business within the bank account. The same with a credit card. But so any interest from your credit card that you have, any interest on bank loans, anything like that, overdrafts, you can write that all off, and all of your bank charges. Okay. So your business taxes, licenses, and memberships is all comes under one. So your business, your city business license, and when they say business tax, they don't mean income tax. They mean any taxes that you have to pay to do business within the city and the province that you're working. And then memberships. I don't know if you have to buy a membership to Epicure every year. Some organizations have that, or maybe you've joined another organization to help you with your sales. I can't even think of anything. So if you've joined any kind of group or organization, you can write off your memberships there. Office expenses. Now, office expenses can cover a multitude of sins. Stationery and supplies is obvious, like envelopes, paper, pens, printer ink, anything like that. If you buy yourself a new computer, a new laptop, you can write it off under office stationery and supplies. You can write the full amount off under stationery and supplies. Office expenses, excuse me, is things like if you have a membership to QuickBooks to do your accounting, that comes under office expenses. If you've paid your membership to Microsoft 365, that's an office expense. If you have membership, a subscription to another software that you use for, I can't think of anything, a design, so Adobe Creative Suite, you can write that off here. You can write off under office expenses. You can also write off coffee, toilet paper, milk, cleaning reagents, because you have to keep your office clean and tidy and up to date. And those are all legitimate office expenses. Okay, so the next line here is professional fees. So this would be, for example, you have an accountant doing, or a bookkeeper keeping you on track, that their fees would come under here. You can also, when you get your taxes done, you can also write off your cost of taxes. So for most people, if you're looking at small business tax preparation, you're looking at $250 to $300 in that sort of region. And so you can write this off as a professional expense. Management and administration fees. This is not something that you will be paying because you're single people, solo proprietors working on your own. But if you had, for example, you working out of a shared office and you have to pay your share of the receptionist, or you have a call center fee that you pay, that would be here. And if you do have an office that you're renting, this would be where you would write off your rent. On line 8910 would be where you would write off the rent for your office if you have an office outside of home. And then any repairs and maintenance. So for example, you you're renting office space and you have to get the carpets cleaned every year. You can write that off here. We'll talk about home office later on because that's a whole other section of the form. But any repairs and maintenance that are relevant to the rented office space. And salaries, wages, and benefits, this is for people who hire somebody underneath them. So again, I'm going to assume pretty much that that's not relevant. And if it is, please bring it up at the end. And again, the property taxes are for the rental space that you have. So if you're renting an office in a local office building, you may have to pay your share of the property taxes for the building, and that's where you would write this off. Travel expenses, this is the expenses that you will use for traveling, not to and from clients, not to and from events and markets and things like that. This is for traveling to your annual convention. So when you go to the annual convention in Montreal or Vancouver next year and Whistler the year after, wherever, that's where you would write off those travel expenses. So your airfare, car rental, if you have it, hotel, your food, and anything like that. Now, when you do travel, you have two choices of how you collect your expenses. You can either do the detailed version or the simple version. The detailed version is you keep all of your receipts and you claim everything down to the last cent. The easy version is that you give an approximation of mileage taken off a Google search. So you do locate, one place to the other on a Google search for mileage, or your the minimum airfare. So if you let's say you're flying from Regina to Winnipeg for your convention, the minimum airfare is what you would pay. So what you would claim. So if you decide to fly first class, you can still only claim the economy fare. Now, the thing here is that if you do fly first class and you decide that you want to claim the full first class ticket price, that's fine until you get audited. Okay. And all of this is perfectly fine. Whatever you write in here, nobody cares unless you get audited. So, and I'll talk about red flags and things that make CRA sit up and listen, sit up and look at your thing, at your file. So, like I say, you can technically only claim the minimum airfare, the minimum hotel fee. And if you're doing the quick and easy way of claiming, you would do a per diem, which is set by the government. So you go on the local government website and see what their per diem is. It's usually in the region of $30 a day, or maybe even $30 a meal. It may be now, I think it's gone up even more. And it's set by the government. So it's always going to be beneficial because it's the government and they always want to get as much money off the government as they can, because that's what they do. So utilities is also part of that office rental thing. So it's not your home utilities. And then fuel costs. So let's say in your little shed at the end of the garden that you're renting from your neighbor, you have a propane heater, then you would be buying propane. If you were a lawnmower company, you'd be buying fuel for your lawnmower, gas for your lawnmower. So that would be where you would claim that. And something that will be relevant to you guys is delivery, freight, and express. So this is shipping and handling, basically. And when you have to pay shipping to have stuff sent to you from headquarters, or then you're shipping it out to your clients, these are all delivery, freight, and express expenses that can be claimed. Now, your motor vehicle expenses, I'll go into more detail. It's a chart that you fill out, and that you would put that information you would enter into here. And the same with capital cost allowance. And then finally, there's other expenses. And in here, you're going to put into this section anything that you have paid out in order to make business that has not already been claimed elsewhere. Okay. And so for me personally, I would include in this section my safety equipment. So I need to have safety equipment when I'm handling chemicals. I have to have a respirator and gloves and safety goggles and all this kind of thing. And I have to buy new filters, and I have to buy new goggles periodically. So my personal safety equipment is going to go under other expenses. And on this instance, I would type in here personal safety equipment, and then whatever I've spent on personal safety equipment. And then so everything else that you've spent, as I say, any money that you've spent in order to make money, you can write off. And if it hasn't already gone into a category, then you put it into the other expenses box. And then you add up your total expenses.
And quick question on the other. For those that have young children and they're going out, they're doing a cooking class at somebody's home, they have to hire a babysitter. Would that go under other, or would that go?
Yes.
That would go under other.
That would go under.
Okay.
Yes, that would go under other expenses because it doesn't come in anywhere else on the expenses form. Okay, so then you've your net income and net loss, which will it's just a calculation. Okay, so and if you're in a partnership, then you have to fill out this section here too on amounts deductible from your share of net partnership income. And again, this is anything that is a direct result of the partnership. So any expenses in there. So let's get on to the business use of home expenses, because this is another big one that people ask a lot of questions about. So the big issue with the business use of home expenses is how much of your home is actually being used to make money. If you're lucky enough to have a separate room and you can cordon off that room and it's used solely as an office, then it's really easy to work it out. So you've got, 100 square foot room, 10 foot by 10 foot room in your 1,000 square foot house. You've got about 10% of your property being used for business. And then don't forget to add in the bathroom, because you have to use the bathroom during the day. So you're allowed to include the bathroom as part of your property that's being used for business, and a portion of your kitchen, because you need to have access to kitchen as well. So once you've calculated, so let's say your house is 3,000 square feet, and you've got about 120 square feet in your office, your bathroom is about another 80 square feet, and your kitchen is 200 square feet. So we take off about 10%. So we'll say you take 10% of that, so 20 square feet. So you're looking at about 300 square feet. So again, about 10% of your property. This is where a CRA red flag comes in. If you are trying to claim more than 25% of your home as business use, that is a red flag. So when you've calculated how much space it is, and let's say you're living in a 600 square foot bachelor, and you work out that 300 square foot is because you've got so much stock that half of your unit is full of stock, CRA will question that. Okay, so try and keep it under 25%, because what we don't want to do is alert CRA to our file. We want to keep everything under the radar, reporting everything, but not alerting them to what we're doing, because you don't want to be audited, okay? So try and keep it under 25%. 25% is okay if you're at that level, but once you start creeping up over 25%, like I say, it does red flag. So now we've worked out the percentage of our home that's being used, and we're going to say it's 10%. So now 10% of your heat bills. A lot of us pay one provincial hydro bill, and it covers electricity and gas. And so you're going to split it 50-50 or just put it under one, electricity or heat. But it's the percentage of the total. So if over the year you're spending about $500 on heat and electricity, $50 is how much you can claim, 10%. Your home insurance, 10%. maintenance 10%. And so when I say, keep it under 25%, most people are up at the sort of 18 to 20% range with the amount of their space, the home that's being used for business purposes. So you can decide if you're using the corner of your kitchen table, you can still claim, but you're going to be claiming less than if you have a dedicated office. Okay, if you have a desk in your bedroom where you're doing all of your business stuff, you can still claim, but you're going to be claiming less than if you had a dedicated office. So again, pros and cons to working out how you do this. Just don't go over that 25%. So maintenance, what's covered under maintenance? So if you do any renovations, if you have to have window cleaners come and it costs you $300 for the window cleaners, you can claim 10% of that. So anything that you do in the house, any maintenance that you do, plumbing, electrical work, any repairs. So if you have to buy a new dishwasher or whatever, that all comes under, and it's a legitimate 10% of that claim on your taxes. And then your mortgage interest, not the mortgage payment, okay, but the interest that you're paying on the mortgage payment. Again, percentage-wise, property taxes, the same. Now, when you're doing this, I have seen people get away. Well, I won't say get away, but that's not really the right thing to say. But have included where they have completely renovated their house and they've put $50,000 into renovating the house, and they have claimed like new kitchen, new bathroom, new flooring, et cetera, and they have successfully claimed their percentage of that on their business taxes because it is a legitimate claim. And then if there's any other expenses, again, you need to specify. So any other home expenses that you have. So in here, if you have a strata fee, that would go in here, that kind of thing.
If you pay for a house, I suggested to people ahead of time, if they didn't want to ask questions, send me the questions and I would ask.
Okay.
So if somebody paid a housekeeper to come in, say on a weekly basis, would that go under maintenance or would that go under other?
I would put that under maintenance, yes.
Maintenance, okay.
Yes. So if you've hired cleaning staff because you don't have the time, then that is a maintenance thing, but it's only 10%. What you might want to do is actually put that under other expenses up here, and then you can claim the full amount. Because if you weren't like with the childcare, right? If you weren't doing the business, you wouldn't need the childcare.
Right.
If you weren't doing the business, you wouldn't need the cleaning service.
I was writing down, I didn't see where you said to put that
up here
under other. Okay.
Yeah, under other expenses on part 4.
Okay.
Yeah.
Thank you.
Yeah. The other thing that I forgot to mention is if you, I don't know if you're ever in this position, but I'll mention anyway. If you have somebody who assists you at your events, and you pay them, I don't know, a commission or something, then it would come under office expenses, because it's not a salary, wage, and benefit. It would be commission that you would be paying somebody on. So that would be where you would put that. And I just remembered that as I was looking at it. Okay, so yeah, so essentially any expenses again that are associated with running your home that is just normal, unless like the cleaning service, if you brought somebody in because you don't have time to do it yourself. So again, if you're in a partnership, then you fill out part 8. And part 9, so equity is a strange one. This is more to do with, it's not really relevant to your business model. So I'm not going to go into this because it starts to get really complicated. And it's when you have a lot of liabilities and you have a lot of equity. So like as a potter, I have wheels and kilns, and I have a huge amount of equipment, which is classified as equity. And so that would be that section, but you guys aren't going to have anything like that, I don't think. Now, capital cost allowance, anything under the value of $5,000 is written off under your expenses. So buy yourself a new laptop, $2,000 laptop, you write it off under office expenses. If you buy a laptop and a printer and a scanner and something else, and it comes to $5,100, you're going to write off each piece individually. If you buy a piece of equipment, so again, for me as a potter, I buy a new kiln, it's $8,000. I'm going to write it off under capital cost allowance because I can then depreciate the value of that over time and claim the cost back. But again, for you guys, it's not relevant. So we'll keep on scrolling by. So now we're getting into equipment. So again, this is not relevant to you because there isn't going to be any equipment that you're buying that's over the value of $5,000 that needs to go on a capital claim. And none of this is relevant to you because it's partnership. Now this is where we come back to you as your relevance. So your motor vehicle expenses. So for your motor vehicle expenses, what you need to do is, there's two ways of claiming this. One way is to do it mileage. So if you are periodically driving to an event, then you can say, Google the distance, and it tells you it's 22 kilometers. And you can claim 22 kilometers at the going government rate, which I think is 60 cents a kilometer at the moment in that region. Well, it depends on which province you're in. So the other way of doing it is to keep track of every single kilometer that you drive, whether you're driving for business or for personal reasons. And then you put that here. So over the entire year, you drive 12,000 kilometers. And in that year, you drove for business reasons 10,000 kilometers. Okay, so only 2,000 kilometers is your personal business, personal business. So now you can claim again the percentage. So you work out what percentage of your total kilometers was business, and then all of the expenses you have for your vehicle, you claim that percentage of those expenses. And again, this is something that CRA is can red flag, okay? So depending on your business, if you're in construction, you have a construction truck, it's 100%, okay? And the other way that you can do this, if you can't remember, and a lot of people don't remember, you can't remember, but you think approximately 25% of the time you were driving for work, you can put in the number 100 as the total kilometers and 25 as the business mileage, and CRA will accept that because it's about 25%. Bearing in mind that if they ask you to prove, then you will need to have a logbook. So with a logbook, what you need to do is starting at the beginning of the year, you write down the kilometers on your vehicle odometer, and every time you drive anywhere, you write in the logbook, and you can buy these logbooks at Staples and Dollar Store and places. Every time you drive somewhere, you put the date, you put the mileage, and then at the end of the year, you can go through it and calculate exactly what it is. And once you've done that once, you can then use that percentage moving forward. So you only have to do it once, you don't have to do it every single year. There's also apps on your phone that you can use for that purpose. But for most people, they'll just go approximately 50, 25, whatever. So again, fuel and oil cost, interest on your car loan, your vehicle insurance, license and registration, maintenance and repairs. So all maintenance and repairs on your vehicle you can claim. If you lease the vehicle, then you can claim some of that, and you'll see there's another chart for that. And then If you have an electric vehicle or a hybrid vehicle, you can charge the percentage of the electricity that you need to charge up the vehicle. So other expenses. Now, some people like real estate agents and people who drive clients around need to get their cars detailed periodically, and that is a legitimate business expense. You can write that off. So you put in, you would just put in car detailing or car washing or whatever into this line. So that's just one example. Other things that you might write off on your vehicle, like if you need to buy a roof rack because you need to carry stuff or a lot of stuff around, you could write that off as well. Okay, so any parking fees that you acquire as a result of doing business. So this would be if you drove to the convention center and you had to pay $8.50 to park for the day, then you would put that in there, that kind of thing. And again, some provinces you have to pay extra if you're using your car for business purposes, and that is what you would claim in here. Okay, so that is how that would be worked out. So chart B here is tells you how to calculate the interest that you can claim on the vehicle. And then chart C here is the leasing cost. So again, if you've leased your vehicle, then you would complete chart C. Okay.
Just a quick question. I had this question asked several times, actually. Back to the insurance under the motor vehicle expenses. I live in BC, and years ago, I had we had a theft of our car. I had nothing in the car, thank goodness. But when I went there, I happened to have my Epicure magnet sign on the door. And the way I was parked, the insurance agent happened to see it. And he said, you don't have business insurance on your vehicle. It's just regular, driver back and forth to work kind of thing. And so I said, no. He says, do you ever have your products and things in a car? And I said, yes, all the time. And he said, if my car was broken into, it was stolen, or I was in an accident or whatever, none of that stuff that was in the car, that was my work, would be covered because I did not have a business. So for here in BC, or where I live, to go from regular insurance to business insurance for my car, it was like maybe $18 over the year. Like it was a crazy inexpensive, and for peace of mind. And I've done the business one every single year since.
Yeah, so it is very cheap. I think most provinces have that option. So you have pleasure use, and you have
pleasure.
Pleasure use, and then you also have business use. And there's two in BC. There's actually two types of business. So if you travel less than 15 kilometers to work, versus if you travel more than 15 kilometers. I don't know if they have that in other provinces. So when you take out your vehicle insurance, your broker should ask you those questions. So certainly ICBC brokers will ask that question here in BC. Other provinces should do, but of course, shoulda, woulda, coulda. So yeah, it's definitely worth checking, because if you are involved in an accident on your way to or from work and you only have pleasure use on your car, they could legitimately refuse to pay any claim on your vehicle. So yes, absolutely. Okay, so that is essentially the form, and that is essentially everything that I can think of to tell you what to claim. So now I'll take questions if anybody has any questions about specific things that they wanted to ask.
So everybody can just unmute yourself and just ask if you have any questions. All the ones that were sent to me prior or during, I have asked, so we're good for that. I think I got them all.
Okay, and one other thing to just on the car expense. If you're driving 40 kilometers to an event, you cannot claim the return journey because you have to go home. You can only claim the journey to the
Ah,
event. Okay. Now, there are ways around that. And when I did my very first accounting for business course, the instructor told us that what you do is you drive to the 7-Eleven closest to your home and buy a pen, and then you can write it off as a business expense coming home because you were going back to make a purchase for business reasons. And as I kind of keep saying, there are things that the CRA will red flag, and one of them is car expenses, and the other one is use of home, and so use of home size on your property. And so if your car expenses are, if your usage of the vehicle is outrageously misproportionate, then that is a red flag. So one thing I don't, a lot of homes now, they have more than one vehicle, and you're not always driving the same vehicle to and from events. So one day you might go in the little car, another time you might need much more stuff and go in the truck. So by doing a percentage of your mileage, by just keeping track, it's much easier to do that rather than the mileage on the vehicle, simply because you're using different vehicles.
so I have a question back to the mileage of only one way. If I'm going to your house, I'm going to your place, you're 12 kilometers away from my house. I'm going to do a cooking class, so I can claim the 12 kilometers
Yes,
there, but not back. But if I wasn't at your place, I wouldn't need to come back. So I do need to come back. So why am I not able to do 24 kilometers
because you're
or
going
a
home.
percentage of the 24 kilometers?
Because you're going home. You have to
Yeah, but
go
I wouldn't be
home.
going home if I hadn't gone to your
I
place.
know, I know.
Okay, so that's just one of those things.
It's one of those things, yeah. And again, I say that these are the rules and how you apply them.
Okay.
If you decide, well, I wouldn't have needed to drive home if I hadn't gone to her house,
Right.
and you decide to claim 100% of that, that's fine until you get audited, at which point you have to justify, right?
And I
And the
think it's
same,
important that we ask the question and don't assume that we understood what you meant, because see that in
yes,
my way, my brain was thinking that, wait a minute, I wouldn't need to come home if I hadn't gone in the first place.
yes,
But now that you said, and also a question that just came in, going back to the fiscal year, our fiscal year is March 1st to February 28. And you said the fiscal year that we report is January to December. So it is always January to December.
as a sole proprietor,
Okay.
you are
So it
always
doesn't have
January.
anything to do with our company's fiscal year.
Your company's fiscal year is differently because it's done
Okay.
from date of incorporation.
Okay. I wanted to make sure they asked to
Yes.
make sure that
Yes.
we understood clearly.
Yeah. So when you're incorporated, it is your fiscal year is from date of incorporation for 12 months. But when you're a sole proprietor, it's January the 1st to December the 31st, regardless of when you started business. And the other thing so you're going to people's houses and you're preparing dishes using the products that you sell. I would, if you don't already have insurance, I think that you should very seriously be looking at insurance, because that kind of gets you into the area of liability.
We do have insurance that we pay once a year with Epicure.
Through Epicure. Okay,
We do
okay,
have
then that's
insurance.
fine. Then that's
And
then
that
that's
covers
fine.
us at a cooking class, doing a market event, that we're actually doing. It's not covering us to go to Walmart and get groceries for an event. It's covering us at
Right.
actual activities. Yes.
It's the liability aspect of
Yes.
the event. Yes.
Yeah.
Okay, good. Good.
Now this form, can you just type in, because it doesn't show what the address is. In the chat, would you be able to just copy and paste what that is, or is it someplace that I didn't see it?
Um,
Just if somebody wanted to print it and look at it more, and
yeah,
if they
just
listen to the recording afterwards, either okay, and they can follow along the form. Is it someplace
let
that we
me,
would?
yes, there is. Let me just pop it in here. Okay. So it's called a T2125
Okay.
form. And if you go to, let me just pop over to, and I can give you the, I can give you a bunch of websites. So this T20 2125 form, and then there's also this website, which helps you to, it explains a lot of the things that you can claim. So it's the expenses section of the form. It's the CRA website that talks to you how to fill out Part 4. And it covers a huge amount of information there. And then I'm going to also, if I can get rid of that for a second, I'm also going to give you this website where, oh no, wrong one. It's the same one again. No,
I only do things like that when somebody's watching me.
Oh, yeah. Okay, so
another question is, for somebody that's new and they have not ever had to do this, which would you recommend would be better? Going to a place such as H&R Block to do them, or finding somebody that specializes in small businesses?
okay, I would tell you to never go anywhere, even across the street from H&R Block.
Okay.
They are one of the worst in Canada.
Okay.
And the American one is good, but the Canadian one, oh my goodness, no. So if you want to go, I would either go with a local guy. You can find a lot of local people do business taxes. Liberty Tax is another one that does business taxes. Liberty Tax are very good. That's who I used to work with. We were constantly having to fix the mistakes that H&R Block made. So yeah, I wouldn't, it's bad in the US too, apparently. Yes, and somebody's posted here about finding someone who specializes in direct sales. That I don't think is as critical because the form is the same form.
Okay.
It isn't?
I don't know.
The 21, you don't fill out 2125 for direct sales?
I have somebody that does it, so I couldn't
Yeah,
tell you.
but Cheryl is
Oh,
Cheryl.
Cheryl.
Yeah, I have
Cheryl.
there's a T2125 dash something. I don't have my form up for my income tax up in front of me. But it's a branch off of this one.
It's on the same form.
And that direct sales does. It's just a bit different in the whole setup and a lot shorter.
It's yeah. It depends on the software that you use.
Yeah.
So
I learned from someone who does taxes, and she specializes in direct sales. So she taught me how to do my taxes.
Okay, no, fair enough.
So,
fair enough.
Yeah.
I mean, I've done a lot of direct sales, and it depends on the software that you use. So the software that I used to use is called Tax Cycle, and when you click on the thing that says it's direct sales, it brings up the forms. So it depends on the software. I just took the 2125 off the CRA website because I don't have access to that software. So, but it's definitely a question to ask whomever you go to make sure that they do have experience of direct sales. And not everybody does business taxes. There are some people who only know how to do T1s, and they only know how to do people who have OAS and CPP. They don't know anything else. And so it is important that you ask the question, do you know what you're doing with my taxes? And if they're a decent tax preparer, they should not be fazed by that question. If they get angry, get up and walk out. Life is too short for that kind of garbage. So, but it is important to ask the question. It's also very important to ask a lot of questions when you're getting your taxes done of the individual that's doing them, to make sure that you understand fully what the information is that they've included, because it is your tax return.
And small businesses or direct sales, do they are held to the same, you got to keep your receipts for 7 years, or is
Yes.
it more, it is 7 years? Okay. So
It's
same
for
as
you.
personal taxes.
Yeah, it's for everybody. The only people who don't have to do 7 years are dead people, and they have to keep them for 10.
Okay.
Everybody else 7. Yeah. Where would the cost of vendor shows go? That's an excellent question.
Oh, that is a good question, Val.
So let me just.
Because some of us pay a lot of money for those of us that do events.
Yes, and I do a lot of events as well, and I will put those under my other expenses.
Okay.
So on the form here, on the other expenses, I will have another line that says market registrations. So yeah, any other questions?
So if you did not have a separate bank account, like for example, somebody that's, starting out, even those that have been a while, they don't make enough, they feel, to actually get their own, a separate
Yeah,
business account.
yeah.
Would they still be able to, like, how much of their interest on there would they be able to, like, most banks you pay $7.95 a month, and then that covers all of your, debit use and ATMs and stuff
Right.
like that.
And it doesn't really matter if you have a separate bank account, then you only charge the cost of that bank account.
Okay.
If you have a separate business account, if it's all in one, just claim it all. Yeah.
Okay.
Oh, and the other important thing to know with your cell phone, so you can claim your cell phone
Yes.
expenses. The other thing I forgot to mention was your internet. So you can claim your internet as well, and you can claim 100% of your internet for home, because you have to have internet to do your business. When it comes to your cell phone, however, you can only charge the cost of a basic plan. So depending on your carrier, I'm with Rogers, my basic plan is $45. That's all I can claim, even though my bill is over $100 a month.
So mine is basic, but I have also an extra for long distance in Canada and US. So it would be we'll say the $40, the basic, plus the extra $8 for US, or just the basic,
Just the basic plan.
even though most of my calls are long distance.
You could add the cost of long distance calls as a line item under
Okay.
other expenses.
So does it have to be a cell phone, or can it be your home line phone as
No,
well?
if you're using your landline for that, then you can just break it down and put, long distance calls.
Oh, what I've been doing is I've been taking the cost of my, like I don't have, I have long distance on, I don't have long distance on mine, sorry. So I just have my basic landline, and I have just always been cutting it in half. So half for my personal use, half for my business use.
And you know what, like I say, until they audit you, they're happy.
Okay.
And then one day they may go, oh, I think I'm going to audit Ral today.
Okay. So,
And at
but
that-
you said you can use Aircel, you can use the basic plan.
Yes, if your cell phone bill is $1,200 a year,
Mhm.
that's a red flag,
Right.
because they don't want people, because some cell phone bills are like $200-300 a month.
Right. Yeah. So
Right.
yeah, like my landline's only $29, so I just usually cut it in half.
Right. And
Yeah.
that's fine. Yeah.
Okay. Good. That's what I've been doing.
Yeah. Yeah.
Good question, Val.
Yeah. And like I say, the thing here is if you look at, like, sometimes I look at my my office expenses and I think, oh my goodness, that looks awfully high. So I'll break it down and I'll see why is it so high? And if I've had a year when I've done a lot of marketing stuff and I've paid Adobe Creative Suite monthly, and so I've got an extra $400 of software registrations, I will break that out of the office expenses and put it as a line item,
Okay.
just to keep those every so often monthly expenses at a reasonable rate, because they're less likely to flag a one-off item than they are all of a sudden your office expenses are $2,000 for the year.
Right.
And it's mostly and the same. This is the same for everybody. It's they're mostly looking for differences, variances on the previous year. So if all of a sudden your income shoots up by double, then your expenses are obviously going to double too. But if all of a sudden your expenses double and your income has dropped, then that's going to be a variance that's going to produce a red flag
Right. Yeah.
in the system.
And you said you can claim the whole computer if you buy a new computer?
Yeah, if you buy a laptop, yep.
Only a laptop, not a desktop?
No, if you buy a desktop too, yes, you can.
Okay.
Yes.
I didn't realize you could do a whole.
Yeah.
One more question. There's probably more, but one more question. So I've got, the office expenses and all that I break it down. But for those of us that have teams, and so we have team training nights, or we do giveaways for promotions and stuff like that. When we go to conference, we have a company store there, and most of us will get a bunch of stuff that we can use throughout the year for our teams. So where would that go?
So that would come under gifts. And again, it's going to most likely going to come under meals and entertainment.
Meals and entertainment. Okay.
Or if, for example, if you were buying let's say you've got a regular client who comes to you and spends, $2,000 a year,
Right.
and you buy them a Christmas gift box, right? You
Mhm.
could put that you could separate those out and put them as a line item under other expenses if it's a significant amount. But if it's, or you could, so another one is you say that you have teams. So let's say you decide to do a team building event and you take everybody off to, I don't know, local paint a piece of pottery place. And $35 each, and you pay the bill and everyone has fun. You could write that off under team building as under the other expense.
Under other. Okay.
Yeah.
I didn't realize that you could, because where you've written right now under other, and you wrote personal safety equipment. I didn't realize that you could just keep adding lines.
Yes, you can. Oh, yes, you
I
can
didn't know that.
add. Yes. Yes. Sorry, yes. It doesn't do it on the form that I have. But yes, you can add 20, 30, 40 lines on that.
Okay. Okay. Well, now that makes sense. Okay.
Yeah.
Any other questions from anybody? This will, if in case you didn't see the post, this has been recorded, and as soon as the recording comes up in my email, I will post it in the group. And then I probably will put it in the leaders group as well for those that are not here and not just in Suki.
I do have one question.
Yes.
Because we drove down to conference.
Yeah, Sally, you're frozen.
Oh, sorry. That wasn't me that asked that.
You're back now. You had
Okay.
frozen.
All right. Somebody was asking a question about driving to conference.
Yeah, we drove down to conference, and so I know we can claim our meals and our hotels, etc., for down there and coming back. Do we claim the gas that we use for that in that same section for conference then?
Yes, but I would recommend, instead of claiming just the gas, mileage is, and do it by the miles, because they take into account wear and tear on your vehicle in that mileage. So like I say, it's around 60 cents a kilometer. And if you work out how much gas is, it's not 60 cents a kilometer. So you get more by claiming the mileage in that instance.
Okay.
But then you wouldn't claim that on your vehicle expenses for the year.
And what about we had to have an oil and lube done when we went down and when we got back. That in the same section or not?
That would go under your motor vehicle expenses, yes.
All right.
Sally, are you there, or have you frozen again?
I'm here, but for some reason you're on my end. I'm seeing you freezing, but obviously it's probably me. No, I'm here.
Okay.
All right, sounds good. Thanks, Em. This has been, it's funny how you think you know it because you've been doing it a while, and then it takes a refresher. Oh, shoot, I forgot to put that in last year. Or, you just something new.
And you know, if you did forget something last year and it's a significant amount, you can always do an adjustment to your tax return.
Okay.
So if you accidentally forgot to include your conference costs that were $4,500, you can always do an adjustment. Okay.
Sounds good. All righty. Thank you so much.
Oh
Em.
yeah, no
This was a
problem. Good luck with
It was a
everything.
big help, especially for those that are brand new. And, sometimes you just get overwhelmed with learning everything, and it's tax time, and it's scary because you don't want to be audited and you don't want to leave money on the table either. You want to make sure you get everything. I
Yeah.
do know that this is something I did years ago. I got this from the dollar store. It's just one of these accordion folders things. And it's got all these pockets, and I just divided them up just like where your expenses are. So I've got advertising, I got food/restaurant, I've got car, I've got household expenses. As I get a receipt at the end of each day, I do not go to bed without emptying my wallet and putting everything in there. It is much easier to do that than it is 3 months later going, where is that stupid receipt?
The other thing that you can also do is keep a plastic bag in your car, and every time you get a receipt, just stuff it in there. And then at the end of the year, when you're ready to do taxes, walk into your local Liberty tax office with your 2 sack loads and go, "Hi, I need to do my taxes." But give them notice that you're doing it. Give them warning. We get, as tax preparers, we get very, very fast at sorting receipts and calculating totals. So yeah.
Now, see, I always add up everything that goes together. I add it up. I add the ticker tape from the adding machine on it with the total on there. Like
Yeah, and
everything
we
is
love that. Yeah, we love
stapled
that.
together. Next time I'm just going to put my garbage bags and just dump it on the desk and say, "Em said so."
Yeah,
All
I
right.
used to
Thank you
get
again for
I used to
doing
get
this.
bags and
And
bags.
if
Yeah.
I have any questions from anybody, I'll just send it to you separately and
Absolutely not a problem.
we can go from there.
Yeah,
All
sounds
righty.
good. Thanks,
For
Sally.
those of you on the East Coast, thanks for staying up.
Oh
so
yeah,
late.
thanks.
Now I can go have my supper. All right. Bye, everybody.
Bye.
Thank you.
Bye.